Amazon's share price on Thursday made the company's founder and CEO the world's richest man for a few hours. We're talking, of course, about Jeff Bezos, who dethroned Microsoft founder Bill Gates, however, briefly. But his company's second quarter earnings missed Wall Street expectations, which saw him shift back down. Bezos' net worth was estimated to be a mere $92 billion at one point. Amazon shares ending the day lower on Friday, but still remain above $1,000 a share. Danny Berger is a Bloomberg reporter and is in New York to break down what all of this means for the e-commerce giant. So let's talk about Amazon and Jeff Bezos. Good to see you. So Jeff Bezos is burning through cash, looking for new investments. We know that they're buying Whole Foods. Some investors not exactly happy about all of this, though. Does Amazon know what it's getting into?
Right. Well, first of all, Rick, let me say that, usually I get to poke fun at our politics reporters because they have the busiest weeks, but it was certainly a busy week in corporate world as well, especially with Amazon, as you're pointing out. Look, Amazon is a giant, not only in the tech world, but also the stock market. So everyone was closely watching these earnings. And as you said, investors were pretty disappointed here. Amazon's sales growth was quite strong this quarter, but their bottom line just did not hold up because of the spending at Amazon. They're spending largely on getting new data centers, new warehouses for their e-commerce site. But look, investors, they should kind of know what they're signing up here. Bezos has been very vocal about the fact that he is going to take company profits and pour them back into Amazon. I mean, the man bought Whole Foods. It should be no surprise that they're spending a lot of money, but at the same time, it did indeed take investors by surprise. They missed expectations for the company, and that hurt its stock. It's kind of funny because geopolitical pressures, all of this politics news does nothing to the stock market, but Amazon's share price falling, that actually took the entire stock market down today. So again, everyone paying a lot of attention here.
Well, Amazon, just one company whose earnings have been reported. There were actually a slew of tech earnings that were reported this week, including Alphabet, which, of course, is the parent company of Google. And that company took a hit because of an unexpected fine, $2.7 billion from regulators in Europe. But the revenue soared in the quarter thanks to YouTube and search ads. So let's talk about Alphabet, Google's parent company. What can they do to prevent fines in Europe and elsewhere with regulators moving forward?
It's an interesting question, and it's hard for me to answer because the company itself hasn't really answered this very well. So the exact question you're asking me was brought up on Google's earnings call, and the executives kind of stumbled trying to answer this. They changed the topic a bit. Look, these big tech companies, again, being so ubiquitous, they're going to head into a lot of trouble. Not necessarily trouble, but dealing with antitrust issues. In Canada, they want to change how Google runs its search ads. A lot of issues coming up that could hurt their revenue. Google, of course, is a giant. If you are spending ad dollars, you're going to Google or you're going to Facebook. That is in the digital space. So they have a lot of cushion here. But these are answers that Google is going to have to figure out, and they're going to have to do a better job communicating it to its investors if they don't want to see their share prices hurt like we did after their earnings this week.
These are not insignificant fines, $2.7 billion in that fine for Google. You mentioned Facebook, Danny. Let's talk about Facebook. Their earnings beat estimates. The company hitting 2 billion monthly active users. That's a big milestone. And its other social platform, media platform, Instagram, also seeing some major growth. So let's talk about what all of that might mean for Snapchat, which went public earlier this year.
Yeah, Snapchat has definitely had some issues. People were so excited about that IPO. Look, another tech company, another big name that's going to grow really fast. Got a lot of attraction when it first launched its IPO. But Facebook since has done a really great job of copying every new innovation Snapchat has put out. You mentioned Instagram. They have stories, much like the Snapchat stories. And Facebook, 2 billion active users, that's huge. I mean, that's what, a third of the world's population? I mean, they are quite a giant here. And like I said before, if you want to spend advertising dollars on the internet, you are going to go to Google or Facebook. Snapchat is much more in the air if that's going to pay off. Even more in the air is Twitter. It's that they've seen their revenue taken quite a hit because people are going to Facebook. Another thing that Facebook says is really going to help them grow faster are WhatsApp and its messaging app. Zuckerberg, during the call, got a lot of investors quite excited, watching its stock like a hawk. You could see it really lift off after he said that they're going to focus on the messaging apps to see if they can generate some more revenue there. He did temper a bit, saying that it would take a while before we'd see the benefit of those messaging apps. However, people are really getting quite excited about Facebook's future growth, even though it is a mature company at this point.
Danny Berger joining us from Bloomberg in New York. Danny, good to talk to you. Thanks so much.